Our next guest expects the Biden administration to give stocks an even bigger bounce this year. Let's bring in Lori Calvasina, RBC's head of U.S. equity strategy. She put out her 2021 forecast today. Lori, great to see you.
Thanks for having me. Great to be here.
In terms of what the market is priced in, isn't this bounce, isn't this rise to new records for the major indices, isn't this already pricing in more stimulus to come? I mean, what else is there?
Well, look, I do think that we've priced in a lot of good news at this point. To me, this is echoing what we saw back in 2018 when people got really excited about tax cuts, and we saw markets kind of get overvalued, get crowded at the beginning of the year, and we had a little sell-off in January. I do think that we have risk of a period of consolidation, and to be honest, that is absolutely normal for what we see in recovery trades. The question is, what do you do if the market pulls back 5, 10, 15% in here? And ultimately, we think that we've seen the major lows in this cycle. We think that the path to economic recovery may be a bumpy one. I'm sensing a decent amount of, sort of concern about the virus backdrop in my conversations today. But ultimately, we think we're climbing out of the hole, that path may have some potholes, but it's intact. And so we'd be using that weakness as a buying opportunity. And ultimately, we do have hope that the Biden administration will get this virus under control.
Yeah, 4,100, by the way, is your year-end price target for the S&P 500. So you're very bullish on the year, Lori. At the same time, I mean, in terms of markets anticipating things, at what point do you think the market anticipates higher taxes? And does that, cause the market to stutter, at the thought of that?
Look, that's one of the big risks, I think, in the back half of the year is what happens with corporate tax policy. We did a survey of our analysts and asked them in their own outlook from sort of a boots on the ground assessment, what did they think about policy and what issues were they worried about? And across all sectors, corporate taxes was the big issue. I don't think that markets are going to price that in yet. I think we need to see what the details are if we do get something. My assumption is that it won't be going back to where we were before, that you might end up having something of an increase to help offset the spending on some of the initiatives that are coming up. And maybe we won't quite get the worst case scenario investors could be anticipating. But I do think it could lead to some gyrations in the back half of the year. So we've got to watch it. The one thing you do need to know, though, is it affects most sectors. The second thing you need to know is it's something that kind of goes. It's a piece of the cake mix. It's not the only thing, and there's a lot of stimulus coming from the Biden administration, so it's an offset to some of that. On balance, I think the Biden administration is going to be net stimulative, and that won't really derail it.
Lori, Tim mentioned 1.4% being a level in the 10-year. I agree with Tim, but is there a level where rates going higher are no longer bullish for the equity market? My sense is it's probably right around there, but I'm interested in your thoughts.
We get asked that question a lot. And in some of our modeling, when we look at the relationship between the dividend yield and the 10-year yield, what we find is that you have to get to sort of 3% or higher, somewhere in there, to really get worried if you do kind of back tests and modeling. But I think, to be honest, it's not really about a level of rates. I think it's about the speed at which rates move up. I think the markets can handle a gentle increase in yield, but it's really when it starts to spike suddenly and behaviors have to be adjusted that it's a problem for markets. So there's kind of no magic
Lori,
number
thank you,
on
Lori
the 10-year right now
Calvasina.
that spooks me.
Shepard Smith here. Thanks for watching CNBC on YouTube.